Hello, and thank you for listening to this tutorial on reports for your accountant. Today I'm just going to show you some common reports that you may want to provide to your accountant in order for them to begin preparing your taxes or for some any financial analysis they may want to perform. Some good reports are, of course, your to locate the majority of these reports. You can navigate to reports, accountant, and taxes. And here's where a majority of reports that your accountant would find useful. They're all grouped nicely here together in this accountant and taxes section. One may be your trial balance. Of course, your trial balance is a summary of all the accounts in your chart of accounts that have a balance and the balance in those accounts. Of course, a trial balance should, the debits and credits of a trial balance should equal. Another good report that your accountant may want to use is the general ledger report. This is just a warning box to let you know that multiple items in a transaction are combined into a single line on the reports, and I'll show you how to expand those reports. But the general ledger report is basically, it takes each account in your chart of accounts and lists the activity for that account. I don't know if we're going to find account here, but if you expand, we're not seeing, but some of these lines may be combined into a single line, and I'll show you on another report a better example of this, but you can expand or collapse the report using this button here. But this is a general ledger report, like I said, just the activity, general ledger activity per account. Another common report your accountant may want is the journal report. Again, we're getting that same message, but your journal report is a for each transaction, it will show you in a journal format the entry. So for example, this bill right here posted the credit to accounts payable, and the debit was for postage and delivery. That's what this bill was. Let me see if I can find one to expand. 1336 here. We're going to take a look at this paycheck, and I'll show you what I mean by expanding. Right now it's just the employee and a summary of their accounts. And of course, on the journal report, the debits and the credits per transaction will equal. But if you expand on this, and then let's find the 1336 again, you can see it breaks it down into the item details for that person. It's probably a good idea to keep it collapsed because the report can get kind of large, as well as the report can get kind of large as it is, so it's important to manage your date ranges here. You may want to break this up and send it to your accountant in segments by month, maybe by quarter. But the journal report as well as the general ledger report can get kind of large. Another report that your accountant may want is the audit trail report. The audit trail is basically an audit of the transactions that have been posted in the system, anything that's been deleted or entered. Here's in this example, here's it's as of today for this date range. So here's this column right here has the date that the item was entered or modified, who entered or modified it, whether or not this is the latest transaction or prior transactions. So these were all prior transactions, and this is the latest in this series. And if you can see, if you want to track the changes, like it looks like in this example, ultimately, they ended up changing from car and truck expense to repairs and maintenance for this bill. So that's the audit trail. That's a good report for your accountant. And in addition, the standard profit and loss reports, which are in the company and financial section of reports. So your standard profit and loss reports, and the balance sheet, of course, is also a good report. So to summarize, the profit and loss report, a balance sheet, a general ledger report, a journal report, the trial balance, and then possibly the audit trail report are all good reports for your accountant. So I hope that helps, and if you have any questions, feel free to give us a call. Thank you.